Folks, I'm sure you've heard about REITs before. A real estate investment trust, REIT, is a company that owns, operates, or finances income-producing properties. REITs generate a steady income stream for investors, but offer little in the way of capital appreciation. Most REITs are publicly traded stocks, which makes them highly liquid, unlike physical real estate investments. REITs invest in most real estate type properties, including apartment buildings, cell towers, data centers, hotels, medical facilities, offices, retail centers, warehouses, and prisons. That's right, prisons. And those are the REITs that I want to discuss in today's video. Prison REITs provide infrastructure and incentivization to maintain high occupancy. And in the case of prisons specifically, that means incarceration. Overall, I've got very specific concerns related to both business models and the most recent COVID-19 pandemic. The pandemic has had a major impact on the prison system. According to industry insiders, ICE's total detention population is approximately 30,000 nationwide, which is a major decline from their population near the end of 2019 of roughly 43,000 detainees. Some of this is due to ICE proactively releasing detainees that are at higher risk of COVID-19 infection. However, the largest impact has been the result of reduced activity at the southwestern border and the federal government's decision to deny entry at the border to asylum seekers and anyone crossing the border without proper documentation in an effort to contain the spread of COVID-19. In other words, the border shut down and COVID-19 had a major impact on the court systems. Prisons that were once occupied as high as 90% are now at 70%. Because ICE put guidance to reduce its number to 70 due to social distancing requirements. This reduction utilization has had a material effort on the earnings and potential long-term effort impact if ICE continues to adjust regulations. In addition to ICE, COVID-19 prison systems are seeing less foreigners as a result of border crossing closures with third world countries over the past few years due to change in U.S. government administration, which has been much tougher on immigration than the previous Obama administration. In light of all of this, I'm increasingly bearish on prison REITs, and there's two that I've got my eyes set on. The first company on my radar is CoreCivic, ticker symbol CXW, which provides correction, detention, and residential reentry facilities. It designs, constructs, manages, and renovates jails. The stock has been losing strength in recent times with a 5-year return of negative 60% and a 5-year earnings growth of negative 17%. Not very impressive. The stock has 3 negative quarters of earnings estimates, and even with the massive rally since February, price remains below the 200-day moving average, which is bearish. Earnings per share for the first quarter came in at 27 cents per share in comparison to 41 cents per share a year earlier, which is not impressive to say the least. The company withdrew from further financial guidance, and I'm expecting more downside, especially in light of the fact that there's still no vaccine for COVID-19 and very little upside in the next few quarters with CoreCivic stock expected. The second stock on my REIT prison list is GEO Group, ticker symbol GEO, G-E-O. The company designs, develops, finances, and operates correction, detention, and community reentry facilities in U.S., Australia, and South Africa. Financially, the company has not been impressive in recent years. The 3-year return is negative 51%, while the company earned roughly $25 million in the first quarter of 2020 versus $40 million in the first quarter of 2019. According to CEO, even though we have continued our operations as essential government service provider, the spread of COVID-19 has negatively impacted a number of our facilities and programs and is expected to result in lower full year 2020 revenues, primarily for our ICE processing centers and U.S. Marshal Service facilities and our geo-reentry service business. The company also sees added expenses over the next few quarters on specifics like personal protection equipment, diagnostic and testing, medical expenses as a result of COVID-19 pandemic, and expect to incur several $1 million of expenses in 2020. Technically, the stock is trading below the 200-day line and continues to see expected weakness over the next few quarters. The restrictions on capacity won't be lifted till there's a vaccine on the table. So far, we don't expect to see one till the end of the year, in the best case scenario. Expect prison REITs to remain soft for 2020 and possibly longer, since the financial impact incurred now will be felt for some time to come. Hope that helps. Folks, one of the smartest ways to gain an edge in today's market is to buy stocks right before Wall Street pours millions of dollars into them, not after. While that sounds like you need a crystal ball, it's actually pretty easy to identify these stocks ahead of time. You see, I've got an indicator that allows me to do just that. Unlike just about every trading indicator out there that tells you about the past, this one can show you what's next while helping you increase your overall profit, reduce risk, and time your trades. There's some very, very time-sensitive info that you need to know, like the number one trade that I'm watching right now. So make sure you click on the link below right now. Talk soon.